Okay, so this was take two on this. Actually, just recorded the whole video and that, and then realized that it wasn't recording just as I went to press stop. So I knew that would happen eventually. But so look, I'll just go over things a little bit quick again. But main thing to sort of take note of overnight was movements with DXY. So look, I was looking at this potential little sort of head and shoulders playing out through last night. So you got it coming down here. It was actually looking like perfectly little line up. Sort of coming through here, bang, and it even sort of gave, as you can see, this nice little neckline. Came down, closed down underneath, and then of course, bang, sort of smacked it all through. So I sort of find with DXY that it's sort of a bit of a like if it looks too obvious, then too many people are trading that way, and it's not easy money. I mean, that's what they say. Everybody says about the whole market and yada yada. But when it looks too obvious, like as in how much of the market are waiting for this to come up here, reject under this zone, and then come back down for here for a continuation. You know what I mean? It was the same sort of thing when you had that big run up from, a couple of months ago. That it looked too obvious, and then it went, and then of course people tried to short into that, and it kept going. People tried to short into it, it kept going, and obviously that went for 3 months. So not to sort of say that this is the same thing to run up here, but certainly in the context of this size move, it looked a little bit too obvious, and of course myself included, just got burnt and ripped out on this. So if we have a look at it, it's sort of like I noticed this before that it's just sort of come up. This is the candle for NFP um, through here. So this is the sort of completion of that NFP move. 100% reversal. Obviously, it was coming down a little bit prior to it all, but that's the candle in which the NFP actually dropped. So if you didn't take your profits in this part here, well, bang, you're back up and you're either stopped out or you're back to zero. So anyway, so we did see a little bit of a sell down. This morning's been a little bit of a sell down, but nothing obviously to note. We're only just into it now, but if we get down on a lower time frame, you can sort of see what I was talking about. So I was looking for this potential sort of bear flag sort of playing out. I had this little head and shoulders, the underside of this area, this previous support. So it was all lining up, looking like okay, yep, we were going to come down. But even prior to the little bits of data and news that we had coming out overnight, we could see the breakdown here, which was obviously turned out to be a little bit of a fake, and it just drove back up here. At this point here, this large first candle with the wick was the bond market. So I'm not a big one. I'm not 100% on how like these things directly affect it. So you know what I mean. Obviously, we can sort of see that it got bought up quite heavily. It also sort of managed to sort of sell down and sort of pair a little bit of those sort of pushes, profits, gains, whatever you want to call it, just in that 1 hour there. But of course, sort of like then that was followed up with Jerome Powell talking just afterwards, and that was this large candle, which really just got it to go bang straight up to the top here. And this is, as I said, what sort of completed that NFP candle breakdown, and really sort of got to the top there. So just a little way into sort of Asia session now. Initial little sell down, nothing really too much of note. We did have a little bit of a sort of gap up, as you can see here, but that was quickly sort of filled the gap and it's continued down to the bottom side here. But I think if we get back on the 4 hour, unless you sort of get down underneath those previous wicks, realistically, it's just in a point where, it's just thinking, and there's plenty of time. This is a 4 hour candle here. There's plenty of time for this to flip and then push up to the top side here. So a couple of little areas that I might be looking for, if we do get that flip, would be obviously if we start to sort of make this into a bit of a channel. You can see that these ones, get rid of this head and shoulders because it's pretty obsolete now. If we do get a flip and a push on this one here, next sort of points of interest, the bottom side of this sort of intermediate channel that it had been respecting. And what would technically then be a bit of a sort of top side of this sort of rising channel that it was forming here. So I wouldn't be surprised if we get a flip on here and it moves up a bit higher. But again, sort of you're looking for a little bit of cooling off here. As a DXY doesn't mind really sort of some deep pullbacks. I've said this a number of times that, and if you look at this, the 78% of this whole move down will actually close this gap which it left um, on whenever that was. I think I can't remember what data that was. Something prior to that week. It eludes me right now, but you know what I mean. There could certainly be a little bit more of a push to the upside here with DXY that sort of snaps out a couple of people. If we flip across to gold, actually I'm going to jump on this other gold chart. So this is the one that we were using yesterday. Get rid of these. As I said, I just did the video, so it's all been drawn on already. But this was the alert line that we had on for last night. Obviously, it came through here at 55. Gold seemed pretty sort of unaffected initially by the bond market. You can see this sort of large, spinning top, kind of doji-ish kind of candle here. It sold down initially, but wasn't enough to sort of really affect it too much, and obviously pushed back up. But when Jerome Powell sort of opened his mouth and that, well, that's when it did sort of knock it back down and sort of came down. I think it was about $10. $8 range or something that has sort of pulled back along there. So yeah, it's just sort of sitting there at the moment. It's Asia session. I don't really sort of ever give gold too much credit for movement in Asia sessions. Occasionally we get some movement, but not really. But if we are to sort of look at this as in a bit of a sort of bullish breakout move, as it did sort of come through this first initial sort of falling resistance, we can sort of see that, the move's not dead yet. It's sort of come back here, between 38 and 50% pullback. You've got the retest of this breakout point, which has obviously offered it a bit of a launch pad to sort of have another run up. But really, you need to get a close above these candles here, above the 63 on a 1 hour minimum. I think it will pave the way for it to push up to give this major breakout of the swing highs at 70. So if we go along here, we could be seeing something like this, a little bit of a base. If we can get a close above these candles here, I'd expect 70 to be the next target, potentially a bit of a pullback there, and then you don't want to get that close above 70 to sort of signal further gains sort of moving forward. And then at that stage, obviously, you can draw up your channels a little bit more, but I think 70 is going to be quite a sort of tough nut to crack, just in the intermediate anyway. If this does tend to sort of play out as a little bit of a wedge, as you see I've got it marked out here. We have that sort of little measured move target, which brings us back up to this sort of neckline, this kind of previous support area around those 80s. And, as we've seen time and time again, going back quite a way, if you go back all the way through here, we know the 80s are a very crucial point with gold. Like, it was a very strong support on that last run. There's been very strong resistance. It was a lot to sort of, you can see here that the market rejected down from it, got a little bit above it here, but obviously unable to sort of close above it. Tried to hold it, and then bang, down away here. So, I still think that, we could see some more sort of upside in gold. But, you've got to get through these first little levels first. And first things first, get above 63, then 70, and then I think you might sort of start to see a couple of people start to go, okay, this is worth something, let's push back in. But realistically, this is the range you want to get into. You want to get into that 80s to 2000, at least enough to sort of play in that range. Because the thing is, if you can't even crack 80, well, I mean, obviously you can't get to 2000, but, that's the thing. You've got to convince the market that above 80, you're going to see a little bit more potential gain. If we flip across to go to China, China sort of came back through. As you can see, this is where we sort of thought it might have sort of come back to. I didn't think it was going to break this little zone here. I thought maybe this was finally the time, but you can see how many times I've thought this, and obviously it's sparked up time and time again. On this daily though, you can see, and this is what I've been pointing out, this is quite a strong rising support, which I think a large segment of the market have just been waiting for. So it's not a big shocker that you did get a reaction once you hit this line, because you've got it at the same time, you've got these horizontal buyers, which we can see has been, more recently, very much a level in which the market decides to buy it up from. So it's no real sort of shocker that, given the confluence of the two, we got a reaction to come up here. So this is back up now. We're retesting the underside of this little intermediate range that we had marked out. And if we can sort of then drive down, I think that'll be the next time, because you're down under this falling support. Who knows how many times people can support it through this horizontal. So you could see a continued churn sideways, but at the moment you want to sort of see a bit of a drive back down to the bottom side here. Above this, the flip side of it, I think if you get back up into this, above this little intermediate support here, this will be the China pushing confirmation for me that this little section's not happening right now, and then we're pushing back up to the top side and on with the great China grind, as it has just been through here. I mean, this whole section has been 14th of August, what is it, the 10th of November now, so 3 months of this super tight range. I mean, if you look at, I mean, yes, you've got this little push up the top there. I think this is where PBOC intervened, but, to take that apart, 1%. 1% movement in 3 months. Like, that's just crazy. It's just not really moving much at all. So I think certainly once this break happens, these little price targets might be a little bit conservative. I mean, these are just based on the size of the range. So that's a technical level for it all. So you could see a push down, push back up, whatever. I mean, this is the price target for, what I mean? I thought sort of DXY obviously marked out here, DXY sub 100 if we can get down into this zone down here. But I think even this push up here, if we sort of look at this as a full move, I mean, this push to down here, this lower sort of support level, this is still only 38% of its run. So you're certainly a long way to go. I mean, we look at how much it got sold down previously, sort of through the end of 22 to the start of this year before this sparked this whole run. And, that dropped sort of 8, nearly 9%. And that's not a long time as well. That was sort of between January and January, November. So in 3 months, this shows how much this is the Great China Grind. Same amount of time here, 8 months. 3 months, nearly 9%. 3 months up here, 1%. Like, it's just tight. So I think a lot of positions, a lot of segments of the market are just waiting, and they're coiling to see, are they just going to get an explosion higher, or are we just going to get a drastic breakdown? I'm still in the camp of a bit of a breakdown. I think that is sort of the direction we're going, but anything can happen, of course. All right, flip across. We've got copper. So copper, you can see I sort of cleaned up the charts a little bit, because one thing I sort of found, like, I mean, obviously I've been trading and marking all these out all the way through here, and it's great because it tells a bit of a story, and you're like, oh, I remember doing this bit, I remember trading that, and that was great. But I find as well, it can get too cluttered to the point that you actually sort of miss things. And so yeah, trying to sort of keep a couple of the main lines, of course, but the bulk of it, scrap it off. And one thing I did notice, which I had previously missed, was this little channel that it starts to be shoring up here. So this is what I picked out last night, and as you can see, I just did the previous video, so I've already gone through and marked out all these points. But you can see that it's sort of shoring up this little sort of rising support here. We've got enough touches coming through here every time it's sort of come in contact here. You can see on the 4 hour, it's been sold down. So, these are little things that I kind of missed a little bit. So for me, it's still in this little upward bullish bounce momentum. I think below this rising support, we're going to see further push to the downside. For now, obviously, it's sort of holding it. I think sort of top side here, if we can get above this sort of, 369-ish kind of wicks, we could move to the top side here. But though this is the major sort of falling resistance. So we can see how strong this has been. This is obviously back from the start of its run, or decline, not really a run, from the 4th of March. which coincides in the same time that China, as we saw on the previous chart, also on here, around March, January, where was it? Yeah, around March. So this is the area here where sort of copper peaked out, and obviously we've seen the reaction since. So it's quite interesting that sort of, you see that sort of correlation between the two here as well. So, a bit of a sort of push down, a strengthening of the yuan, um, would be sort of coinciding with a little bit of sort of copper strength as well, because China, maybe they're not still classified as the world's workshop or whatever it was, but the idea is that they do a lot of manufacturing. A lot of stuff comes out of there. So the more that they're sort of strengthening up, the more that they're the more that they're strengthening up, the more that there's going to be sort of manufacturing and output coming from them. The higher demand there will be for copper. Higher demand, higher price. Seems to make sense anyway. So we go back onto copper. So that's just an interesting note from previous. But the here and now, this is the channel that I'm happy to sort of trade through. But point being with this is this big purple line coming down here is quite a strong resistance. So, I don't think it's maybe necessarily ready to sort of break through it. So it means if we do get a pop above these sort of wick highs here, this could provide a little bit of a sort of heavy roof for this move. But again, if you can get to the top side of it, well, you got to take note of what that means as well. Because obviously, if we can get to the top side of it, then that's going to be sort of showing that, hold on, we might be getting a little bit of a break of trend. Of course, this was the bottom. Where have we got it here? This was the bottom side of the large triangle, which we've been sort of stuffing around on the outside of for going back to September, so 2 months or so. We've been technically outside the bottom side of here, but we didn't get the massive meltdown breakdown. Copper hasn't come down to sort of 320, hasn't even come down to 340. So it obviously attempted to come down here, but we've seen this sharp little sort of rally pushing up here. So it's starting to get a little bit of sort of I expect a bit more of a chop through this zone here. If we can get a break up here, something along like this. But this is the new sort of triangle that I'd be looking for breakouts above. So, if we get above this section over here, I'd be looking for the sort of corresponding trades with a stronger copper. So, you'll probably see sort of Aussie appreciate. You'll see DXY sell off a bit more. You'll see the yuan sort of strengthen up. Cool. All right. And of course, then finally, just have a look at Aussie. So Aussie, get this off here. So redo it in a second, but yeah, Aussie obviously still continuing to fail. Like it gave a little rally attempt in that sort of last night. So if we get it on the lower time frame, you can sort of see this that it had a little bit of this sort of wedge that it was forming. Get rid of a few of these. Cool. So yeah, it had this little wedge that it was forming, and it was trying to rally. And this is the area where sort of like, as I said, DXY did that break of the neckline. Aussie got its pump out of the top here. Both of them faked and then came back down. You saw first initial move was the bond market, which was this first candle here. It's tried to rally up and sort of actually closed that hour sort of like, in line with these previous 1 hour supports. But then Jerome Powell opened his mouth and it just went crash. And yeah, obviously back down. So nothing really to note of Aussie at the moment. You could say that, look, you've got a little bit of this falling resistance here, so you may see a little touch up along this way. I'm not really a big fan of this bottom line here, to tell you the truth. I think this is just trying to get an idea of if it were a channel, would it be something, but it doesn't seem to be there. I think if sort of like you get a break of these first weeks, you might see a little bit of a bounce around the sort of 30-40 area, but who really knows? It's sitting at the 61% of the main sort of breakout. So down here. So I think sort of with Aussie, I think a lot of the market, like myself included, really got sort of snapped out on that rate decision because, I mean, in all sort of fairness, it seems like, okay, higher rates, that's what the market's looking for. Well, that should go. And yes, you could say that, the part of the market had sort of positioned for the idea of it, hence this big buy up here, which also coincided with DXY sort of in US dollar sell-off. But it wouldn't be the entire market is like, oh, look, we're getting into it just to sell into that one little bit of news. Well, not one little bit of news, but one bit of news. So yes, you could expect a pullback here. But the fact that it's like 1, 2, 3, 4, it's on its fifth day selling down now, really puts it in danger of it being just a little sort of a stop out run. Because you got to think anybody that was short going back from August, so last 3 months, anyone sort of short through this area, stops to even, stops above technical levels, they've all been hit. So that could just be clearing out the stops in turn for it to sort of drive down a lot further. Hence this red line from the last video I just sort of made. So at the moment, look, it's trying to hold this 61. You can still say in a somewhat technical level, it's just backtesting its breakout point because we know that this was obviously quite a strong sort of falling resistance. Once we got the pop there, this could be a backtest of this and we could see a bit of a push over here. What happens with DXY and US dollar is the driver. Aussie is just so incredibly weak. Like nothing has been pushing it. Like, equity markets have been sort of ripping to the top side. Aussie is a risk asset, so it should be moving up with it. But even with the risk on attitude, it's not. And we found the same thing through this area over here. So, when Aussie was this is going back a couple of months, of course, but this is around the time that if you looked at DXY, where was it? So this is DXY here. So this first drop down to this point here at 102 corresponded with Aussie hitting 69 and then sort of pulled back, as you saw DXY pulled back, but then DXY didn't just sort of come back to that level here. DXY dropped a further, what was it, 2.33%. But at the same time, all that Aussie could do, July 13th or so, around that early July period, is around here, July 13th. All Aussie could do was get back up to its highs. So that's an indication that sort of like, I know Aussie isn't part of DXY, but as a broad sense, people buying, selling US dollar against the Aussie, that was showing that even though sort of they were happy to sort of sell US dollar quite heavily against other things, they still wasn't enough to buy Aussie. And this is kind of what we're seeing here as well. That sort of like, we're seeing that sort of like typical sort of correlations, as I said, equity markets running, risk on attitude within the market, it's still not getting a spark and people aren't buying Aussie. Even on this sort of last push down here, like, a lot of the segment, this wasn't just due to the RBA, obviously that was a part of it. But, even the sort of, you look at the other things like the euro dollar, it sort of managed to rally coming down this area here. So this was the low. We've got this little fib level here. The euro managed to get a bit of a push and came back up to 61% of this drop down before it sort of settled, and it's about midway at the moment. But Aussie got up to around 64.50, which is just over the 38%. So it just couldn't rally the same. And segments weren't buying it the same in the market as, the other sort of majors. So get rid of this one for now. So as I said, we're sitting around the 61. If it can hold here, maybe rally attempt. But, for the time being, it's certainly looking pretty sick. You just need, US dollar to really sort of calm down. So if that decides to keep squeezing, I think Aussie could be in some real trouble and be at least a minimum retesting the low sub 63. Cool. That's about it from me.